Vikas Khemani, his founder, Carnelian Asset Management, joining us on the phone line. Vikas, very good morning to you. Markets have opened slightly better than expected, but we wanted a view from you now that we have the result season behind us and the unsettling kind of feeling that we're not going to see a rebound anytime soon. Are you going out and buying right now, Vikas?
I think markets are right now in a good consolidation range. Like you rightly said that the mood has shifted from being generally of the market that there's no hurry to buy kind of thing. So and our own view is that markets are likely to consolidate over the next 3 to 6 months, and which is a very, very good and healthy consolidation. I think we have seen a runaway kind of market over the last 2 years, and when you're sitting on the backdrop of this kind of market, such kind of consolidation is much more desirable. So I think we've seen some bit of a correction, but probably we'll see more time correction over the next 3 to 6 months. So it will give people time to reflect, revisit some of the sort of opportunities and companies, and I think that's a good situation. So I think that's what we are doing right now. We are neither in a hurry to deploy nor we are bearish in the market.
So you're neutral. You're not in a hurry to deploy. You're not bearish. But then, Vikas, let's look at some of the overview from the result season and mixed outlook there. It's like all data depends on where you slice and dice it. But what is the overwhelming feeling that you're coming away with in sense of the health of corporate India and especially specific sectors like banks? If we look at banks, smaller lenders, IT, consumer-facing companies, some spots of weakness there?
So I think we have seen kind of mixed kind of results, but by and large, we've been okay with our set of companies in terms of results. We think banks have corrected a lot or consolidated a lot. So we continue to remain positive on banks, especially high-quality large banks, both within PSU and private sector. We think that over the next 12 months, that sector will do very well because that is also unimpacted by, what's happening elsewhere in the world. And generally speaking, I think all our health of our banks have been pretty solid, except the ones who have a little bit of exposure towards Micr Finance, which I think has already kind of corrected, and I'm sure will more get reflected. But generally speaking, as a sector, we are kind of quite positive. So I think we've been looking for, again, stock-specific, sector-specific. Pharma and healthcare continues to do well. CDMO kind of opportunities continues to do well. So again, you look at your long-term horizon. For us, as far as the India opportunity is concerned, nothing changes. Corporate India is in healthy shape. Opportunity in right space. So yeah.
What is your most favorable sector right now, Vikas, where you feel that valuations have come off enough, they're better priced? What would be some of those kinds of companies that you're looking at?
I think PSU Banks, according to me, has come down a lot, and there were a lot of opportunities are there. 15-16% ROE below book, even 12, 13, 15% growth offers a good risk reward. And we've seen this kind of thing when markets swing one way. That is where the opportunity comes in the following period, and that's what we see. That's one segment where we see good opportunity space coming. Many space in chemicals. I think again we are seeing a lot of correction has happened. It's definitely a long-term play, but we think that many opportunities where good risk reward exists. We look at it. Lastly, I think Pharma, where we still see many opportunities which are interesting.
Vikas, morning, Neeraj here. Just one follow-up question. When I hear you speak about PSU Banks, it seems Vikas Khemani has turned a value buyer. That's not the Vikas Khemani that we usually know. So what prompts this change?
No, we are not buying PSU Banks because I think we've been owning PSU Banks since 2022, and in between we trimmed a little bit, but we have taken it back. So PSU Banks have got transformed. If you see the governance, technology, and asset quality, all three vectors which were basic major reason for PSUs to take a knock have got addressed, and all PSU banks are now beating even many private sector banks in ROE and all. So I think the franchise is strong, sector is consolidated, they are well-run banks, and the growth is there, moderate growth is there, so is the valuation. So I think in a market like this, especially when nobody wants to kind of look at them, we think that there are interesting opportunities and growth will come. Whether it is 12% or 15%, only time will say. But even if I get a 15% growth, one time book 15% ROE, I think it's a good risk reward trade.
Because I just have one more question, really, and that is on accidents that have happened this quarter, right? And the way market is now punishing them. Like Honasa is a case in point today, down 20% after the numbers. Fusion Microfinance talking about how there might be concerns around them remaining a going concern as well. If I look at buckets wherein the concerns have emanated the most, one of them is coming in from the financial space, which is the microfinance pockets. More companies sounding off alarm bells or weak results than companies which are withstanding the pressure. What's your sense, because you look at financials so closely, what's your sense on microfinance players?
So I think we have never liked microfinance as a player, and we have never invested into microfinance as a player, as a segment, because we think that it's inherently a very weak segment. And if you look at last history of 10, 15, 20 years, no microfinance company has created any meaningful wealth, right? Starting from SKF, right? Every time you see it, you get, if you are getting built, and then every 1 or 2 years you get some sort of knock on that. So there is a sensitivity in that, and so the scope for sustainable value creation on a risk-adjusted basis is very limited, and hence we've always sort of stayed away from this as a segment.